This is a discussion made for Part B, Question 4, Final Examination, January 2018. For the first question A, calculate the average collection period if its account receivable balance was 300,000. The formula for average collection period is account receivable divided with credit sale divided with 360 days. The information for 360 days is given in the question, yeah. And the information for account is receivable is also given at 300,000. But the information for credit sale is not given. So you need to calculate the amount for credit sale by using the formula of total sale equal to cash sale plus credit sale. Total sale is given in the question at 5 million. Cash sale is equivalent to 40% of its sale, which means that 40% times total sale 5 million. And by using this information, now we can calculate, we can know the amount for credit sale. So total sale 5 million minus with cash sale 2 million, credit sale will be 3 million. So with that information, now we can complete the formula for average collection period, and the answer is 36 days. For question 2, the firm new level of account receivable. If calculate the firm new level of account receivable if its average collection period is reduced to 30 days. So account receivable or average collection period is known at 30 days. Account receivable is unknown. You need to calculate. Credit sale is known at 3 million and 360 days. You make a calculation on that, and the answer for account receivable is at RM 250,000. Question 3. Calculate the firm cost of goods sold. This amount can be found by using this equation. Sale minus cost of goods sold, we arrive at gross profit. The amount for sale is given. The amount for cost of goods sold is not given. The amount of gross profit is also not given. But we can calculate the amount of gross profit by using gross profit margin, which is at 30%. The formula for gross profit margin is equal to gross profit divided with sale. Now, gross profit margin at 30%, gross profit is unknown and sale is at 5 million. Gross profit is equal to 5 million times 30%, which is 1.5 million. Now we know the information for sale at 5 million, gross profit at 1.5 million. To get the cost of goods sold, just minus the amount of sale 5 million with the amount of gross profit. So the answer for cost of goods sold is at 3.5 million. Question 4. Calculate the firm net income if it had return on asset of 15%. The formula for ROA is net income divided with total asset. Okay, ROA is given 15%, net income is unknown, but we have the information on total asset, which is at 2.4 million. Net income is 2.4 million times with 15%, so we get 360,000 for the net income. Question 4B, the financial data are obtained from A Board Sdn Bhd for the year ended 31st December 2017. So you are given two statements. One is statement of profit or loss, which is income statement, and another one is the balance sheet or statement of financial position of A Board Sdn Bhd as at 31st December 2017. So from this information, you need to calculate the Number 1, current ratio, yeah. Okay, the formula for current ratio is current asset divided with current liability. So where can you find this information? Just look into your balance sheet. Total current asset consists of inventories at 1.8 million. And then we have trade receivable at 2.25 million. And followed with prepayment or prepaid expenses at 45 million. And cash and bank at 410,000. The total for current assets are at 4.505 million. And for current liabilities consists of other payable at 550,000, and then for trade payable at 680,000, and accrual at 75,000. Total liabilities are at 1.305 thousand. The answer for current ratio is 3.45 times. Next is asset test ratio. The formula is current asset minus closing inventory minus prepaid expenses or prepayment divide with current liability. The amount for current liabilities at RM 1.305 million, and for total current assets 4.505 million. The amount for current closing inventory 1.8 million, and the amount for prepaid expenses 45,000. So for current asset minus closing inventory minus prepaid expenses, the amount are RM 2.660000, and then divide with current liability 1.305 million. The answer for asset test ratio is 2.04 times. Number 3, debt ratio. The formula is total debt divided with total asset. Total debt consists of, refer to the balance sheet, yeah. Okay, total debt consists of non-current liability plus with current liability. Non-current liabilities are 6% bond at 810,000, and then 10% redeemable preference shares at 1 ringgit each, 540,000. And for current liabilities, total at 1.305 thousand, 1.305 million. Divide with total asset. The information is in your balance sheet. In the balance sheet of A Board Sdn Bhd, total assets are 9.705 million. So divide the amount of total debt with total asset, you get debt ratio of 0.2736 or 27.36%. And for number 4, time interest earned, the formula is earning before interest and tax divide with interest. Okay, please refer to your income statement, right? Income statement of A Board Sdn Bhd for the year ended 31st December 2017. The information for earning before interest and tax is not given, but the information for profit before tax is known, right? Amounted to 960,000. So to get the amount for earning before interest and tax, you need to add back the amount of interest, which is at 200,000, yeah. Okay, so you add back profit before tax with interest, and you arrive at the amount for earning before interest and tax, and then divide with interest, 200,000. The answer for time interest earned is 5.8 times. And for the total asset turnover, the formula is sales divided with total asset. Sales is given in the income statement at 4.5 million. Total asset is given in the balance sheet at 9.705 million. And the total asset turnover is 0.464 or 46.4%. Question B, evaluate on the company liquidity and debt management for 2070 as compared to industry average. So to make a better comparison, we prepare the table and put the ratio of A boats and Berhad and industry average side by side. So easier for us to compare. To analyze the liquidity, we need to use current ratio and acid test ratio. Okay, so based on the analysis or based on the calculation that we made earlier, we can conclude that the company liquidity position is better than industry average because the company has higher current and acid test ratio, and it indicates that the company is able to meet its short-term obligation. And for the debt management, we can choose the debt ratio and time interest earned. Okay, for A-boat Sdn Bhd, debt ratio is 27.36%, whereas industry average is at 30%. And for time interest earned of A-boat Sdn Bhd is at 5.8 times, industry average at 4.9 times. In conclusion, we can say that the company debt management is better than industry average because the first reason is debt ratio of the company is much more lower, is lower at 27.36%, and it is less than 0.5. So it means that most of the company assets are financed through equity, not by debt. Yeah. Okay, and for the second reason, time interest earned is slightly higher than industry average. This means that the business has better opportunity to service its interest payment as compared to industry average. There are two ways to improve liquidity for question C. One is to promote cash sale by giving discount, and number two is to improve the management of current liability. For example, if the management find out that the amount of current liability are too high, so what the company can do is to reduce them by paying the creditor on time. So that's all for question 4.